Welcome back to JRNY TV. Today, we are covering 10 of the biggest headlines over the last 24 hours. Everything from XRP's explosive surge and Ripple's legal momentum to Cardano's rebound on Trump speculation. We'll also dive into Solana and USDC's spotlight under Trump's crypto-friendly policies, Litecoin's ETFs driven surge, plus we'll unpack potential Federal Reserve rate cuts and what they mean for crypto. There's a lot to uncover, so let's jump right in. This could be the most significant crypto development of the year. Donald Trump has officially declared cryptocurrency a national priority. This announcement comes as part of his broader plan to position the United States as a global leader in financial innovation. Trump's stance marks a stark contrast to the previous administration's often combative approach to digital assets, and it signals a new era for the crypto space in the United States. The declaration outlines a multi-pronged strategy, including fostering blockchain innovation, creating clear regulatory frameworks, and encouraging private sector investment in crypto technology. By treating cryptocurrency as a priority, the administration aims to attract global talent and capital, ensuring that the US remains competitive in the rapidly evolving digital economy. Analysts believe that this could pave the way for significant growth, specifically for projects focused on scalability and interoperability, as these are likely to attract government and institutional interest. This move is already having ripple effects in the market, with major cryptocurrencies like Bitcoin, Ethereum, and Solana seeing increased trading volumes. For crypto advocates, this is a long-awaited moment that could bring legitimacy and broader acceptance to the industry. However, some skeptics remain cautious, warning that such a bold initiative must be backed by consistent policy action to avoid market volatility. Either way, this announcement has set the stage for an exciting chapter in crypto's history. In a surprising twist, Trump's treasury pick has openly rejected the need for a US central bank digital currency, CBDC, a move that deviates from the growing global trend toward government-backed digital currencies. This stance comes as countries like China, the EU, and even smaller economies like Nigeria accelerate their CBDC development. However, the administration's argument is that a US CBDC could pose risks to financial privacy and innovation while offering a little additional benefit over the existing digital payment systems. The Treasury nominee argues that the private sector is better suited to drive innovation in the digital payment space, pointing to stablecoins like USDC is a prime example of scalable solutions that do not require government intervention. Critics of CBDCs often highlight the potential for mass surveillance and the centralization of financial power, concerns that Trump's administration seems keen to address by promoting private alternatives. This position could significantly impact how the US interacts with the global financial system. While other nations are using CBDCs to increase their monetary influence, the US seems to be betting on a market-driven approach. For the crypto industry, this is both a challenge and an opportunity, as it places the responsibility for innovation squarely on the shoulders of private companies and blockchain developers. With Trump's return to the White House on the horizon, the crypto world is buzzing about the potential impact of his administration policies. Trump's SEC is expected to pivot from aggressive enforcement to creating clear and consistent regulatory frameworks. In this shift, it could usher in a more collaborative relationship between regulators and crypto companies, marking a stark contrast to Gary Gensler's tenure. Assets like Solana, USDC, and XRP are already being touted as the biggest potential beneficiaries of this new approach. For XRP, this could finally bring an end to the legal uncertainty that has plagued Ripple's operations for years. Trump's administration is rumored to prioritize innovation and adoption, which could allow Ripple to expand its partnerships and use cases without fear of regulatory roadblocks. Solana, with its high-speed, low-cost blockchain, stands to benefit as developers and institutions seek scalable solutions. USDC, one of the most widely used stablecoins, could see a surge in adoption under a stable regulatory framework. The market is already reacting positively to all these expectations. XRP, Solana, and USDC have all seen price and volume upticks as investors position themselves for what they believe will be a more supportive environment. If these policies materialize, it could set the stage for widespread adoption, increased innovation, and the next major crypto bull run. For now, the market is keeping a very close eye on Trump's inauguration and the early actions of his administration. Ripple's legal chief, Stuart Elderati, recently shared a bold prediction. The SEC's appeal in the XRP case might be dropped entirely under Trump's administration. The SEC has been appealing Ripple's partial legal victory, where a judge ruled that XRP's secondary market sales are not securities. While this decision was a win for Ripple and the broader community of crypto, the SEC has remained persistent in challenging aspects of the ruling. Elderati believes that Trump's SEC will focus on creating clear regulatory framework instead of pursuing enforcement action. This would mark a significant shift, potentially ending Ripple's long-standing legal battle and paving the way for regulatory clarity in the US. If the appeal is dropped, Ripple could redirect its resources toward innovation and expanding its global network, specifically in cross-border payments where XRP excels. The implications of such a decision, they would extend far beyond Ripple. In fact, it would signal a change in how the US approaches crypto regulation as a whole, setting a precedent for all other projects that are facing legal scrutiny. For XRP, the holders, the community, this could eliminate one of the largest barriers to adoption and open the door for significant institutional interest. With Ripple poised for growth, the market is watching closely to see how the new administration will handle this pivotal case. XRP, it's been on a tear lately, surging past $3 for the very first time in 7 years. This price spike is not just driven by retail enthusiasm. It's actually being fueled by strategic whale accumulation. High net worth investors that have poured hundreds of millions of dollars into XRP in recent weeks alone, signaling very strong confidence in its long-term potential. Whale activity often acts, as we all know, as a precursor to significant market movements. And in XRP's case, it is very clear that the big players, they're positioning themselves for future gains. Adding to the momentum are growing rumors of an XRP spot ETF. Analysts, including those at JP Morgan, believe that XRP is a prime candidate for such a product. Given its utility in cross-border payments and its expanding adoption, if approved, an ETF could bring unprecedented liquidity to XRP, similar to the impact seen with Bitcoin and Ethereum ETFs. Institutional investors who have been very cautious, rightfully so, due to regulatory uncertainty, would in fact have a regulated avenue to gain exposure to XRP, thus driving demand up even further. Looking ahead, XRP's path appears incredibly bullish. The combination of regulatory clarity, increasing adoption, and the potential of approval of an ETF could propel XRP to new heights. Analysts are already eyeing a $4 price target by 2025. It is 2025, underscoring the market's confidence in Ripple's ability to navigate and thrive in this evolving landscape. For XRP holders, the future is looking brighter than ever. With a bombshell from Capitol Hill, Senator Cynthia Lumis, a staunch crypto advocate, has accused the FDIC of destroying key documents related to crypto regulation. A move she claims could lead to criminal charges. According to Lumis, the destruction of these documents pertains to OCP 2.0, a policy framework designed to promote innovation and clarity in digital asset regulation. The alleged actions of the FDIC not only undermine transparency, but also raise serious concerns about the agency as well as its handling in regulatory responsibilities. Lumis has called for a full investigation, stating that such actions would erode trust in institutions tasked with overseeing financial innovation. If proven, these accusations could have far-reaching implications for crypto regulation just in the United States. The timing couldn't be more significant, as the crypto industry is already grappling with uncertainty stemming from SEC enforcement actions and broader regulatory scrutiny. This case, it highlights a growing divide between crypto advocates in Congress as well as traditional financial regulators. For the industry, this could serve as a rallying cry to push for greater accountability and transparency in how regulators treat emerging technologies. As more details emerge, this story has the potential to become a pivotal moment in the fight for fair and clear crypto regulation. Next up, Cardano is making waves with an impressive rebound, climbing past $1 as speculation swirls around Trump's pro-crypto policies. Investors are bullish on the idea that Trump's administration will take a much more favorable approach to digital assets, with Cardano being one of the potential beneficiaries. Analysts now believe ADA could push toward $1.20. $1.20 in the near term, especially as institutional interest in blockchain innovation grows exponentially. The timing could not be better for Cardano. The network is preparing for a Plomin hard fork, its key upgrade that will usher in a full decentralized governance. This is a major milestone for Cardano, reinforcing its commitment to scalability and sustainability. Combined with a renewed optimism surrounding US regulatory policies, Cardano is positioning itself as a leader in the next wave of blockchain adoption. For investors, the combination of technical upgrades and the favorable market sentiment makes ADA an asset to watch. The rally past $1 signals strong momentum, and with whales continuing to accumulate, the bullish outlook seems poised to persist. So, whether you're a longtime Cardano supporter or new to the ecosystem, now is a very fascinating time to keep an eye on ADA's journey. Litecoin is enjoying a surge in attention and price following the announcement that Canary Capital has filed for the first ever Litecoin ETF. This filing has reignited interest in Litecoin, which has often flown quite under the radar compared to Bitcoin and Ethereum. The move is significant given the ongoing shakeup at the SEC, with the incoming Trump administration signaling a more crypto-friendly approach to regulation. Investors are seeing this as an opportunity for Litecoin to finally step out of Bitcoin's shadow and claim a much more prominent role in the market. Litecoin's appeal lies in its strong fundamentals. Known as the silver to Bitcoin's gold, LTC has built a reputation for reliability, speed, and low transaction costs. These characteristics make it an attractive option for both retail and institutional investors, specifically as they seek more efficient alternatives to Bitcoin. An ETF? That would provide a regulated, accessible way for institutions to gain exposure to Litecoin, potentially driving significant demand and liquidity. If approved, this ETF could mark a turning point for Litecoin, putting it back on the map as a major contender in the crypto space. Analysts believe the ETF could trigger a wave of institutional investment, similar to what we've seen with Ethereum and Bitcoin. Both are ETFs. Additionally, the timing couldn't be better, as Trump's administration is expected to prioritize innovation and reduce regulatory barriers, creating a favorable environment for new crypto projects. For Litecoin holders, the potential approval of an ETF represents more than just price gains. It's a validation of Litecoin's staying power and its broader role in the crypto ecosystem. As the market continues to evolve, LTC could emerge as a key player in the next phase of institutional adoption. Finally, let's talk about macroeconomics and how the Federal Reserve's potential rate cuts could impact the entire crypto market. A Federal Reserve official recently suggested that 3 to 4 interest rate cuts might be on the table for 2025. Heads up, you already know, it's 2025. If implemented, these cuts could create a favorable environment for risk on assets like cryptocurrencies, as lower rates typically encourage investment in higher yield opportunities. For the crypto market, this could act as a catalyst for renewed growth. Lower interest rates often lead to increased liquidity in the entire financial system, of course, making it easier for both retail and institutional investors to allocate capital to assets like Bitcoin, Ethereum, and Cardano. Additionally, rate cuts could reduce the attractiveness of traditional savings and bonds, driving more investors toward alternative investments like, you guessed it, crypto. However, it's important to remember that rate cuts are often a response to economic challenges. While they might benefit crypto in the short term, they could also signal broader instability in traditional markets. For now, the Fed's comments are a reminder of how closely tied the crypto market is to macroeconomic trends. If rate cuts do materialize, they could set the stage for a major rally, making 2025 a pivotal year for digital assets. And that's a wrap for today's episode of JRNY TV. From Ripple's legal momentum and XRP's massive rally to Trump's crypto policies and Litecoin's ETF surge, the crypto world is buzzing with opportunity. Don't forget to like, subscribe, and hit that notification bell to stay informed. Thanks again for watching, and we'll see you next time.